Good morning, Tim. Before we
Hey
get
there, Fred.
started,
How are you?
let's do a little intro. I don't know, some people our friends and family obviously know who we are, but there's some people that are watching this that really don't know. Um, I'll introduce myself, Fred Scala. I've been in the market since Jimmy Carter was president, I guess, January 1979. Worked the first 25, no, probably more, 30 years of my career on a trading desk, trading spot forward, options, metals, prop. Major money center banks, major European banks. And the last 15 years, I've been selling software and working as a consultant and for a number of different places, still involved in the foreign exchange industry and the trading industry. Tim, take it away.
Good morning, folks. I'm Tim Scala, Fred's older brother. Um, I'm the dinosaur in the family. I actually traded currency under Bretton Woods, and I traded when it collapsed in those years. So that would have been sort of 1969, 1970. Um, I'm currently a fellow for a think tank, Discovery Institute, slightly right of center think tank. I do a little writing for them. I was a treasury manager for a regional bank for a few years, and I spent a lot of years in this market, and I try to consider myself a student of the market. So that said, um,
Today's
it's
Fed
Fed
Day.
Day,
Yeah.
and I guess that's the first item on the agenda. I don't really see it. I mean, I see volatility here, but we've already priced in a Fed move, a big Fed move. We've priced in 50 basis points, I think.
But I think there's opportunities for disappointment at every turn. If it's 50 basis points, are they done? Is that it? Is it 50 basis points because the Fed fears we're in a recession? Is it 25 basis points and they want to pause? Is it 25 basis points and they say we're going to get a lot more? And the outlier is if they do nothing and say they're still monitoring. So I
And
say there's, yeah, a lot of room
I,
for disappointment.
I think that's the worst part of it is you can make an argument no matter what they do for it to go up or for it to go down. Um, and bottom line, I think there's just still money ready to be invested. And let me bring up a four-letter word here. The word is risk, you know.
Hmm.
And when people start talking about risk, I think about lobster.
Yeah, you've made this point
That makes
before.
sense,
Yeah,
right?
yeah.
I used to give the financial crisis tour. I would say, we're standing in front of the stock exchange, and it's a building that's all about risk. And people shy away from risk, but risk is really good for a society, for a civilization. And I would say, anybody here like lobster? And some people would raise their hand. And I'd say, well, think about the first guy who ate a lobster. You know, he pulled this insect out of the water and then decided he was going to eat it. And now we know it's great. We could all eat lobster. You know, we learned from somebody taking risk. And when we have risk takers in an environment, that's a positive thing. We all learn from it. We
That's
learn
right.
not to go there or to go there.
That's right.
Um, so lobster plays a big part, I think, in what's going on
Risk
in these
analysis.
markets.
Yeah,
And
yeah.
we're in a situation now, not yet actually, but after the election, where the risk reward ratio could change quite dramatically. I mean, if Harris is elected and we take tax on capital gains from 21 to 28%, that's a 30% move. We've changed the risk reward ratio significantly. And
Hmm.
corporate taxes go up, and then if you're over some astronomical number like $100 million, or you got net worth of X, then other things come into play. I mean, the thing that everybody be keeps focusing on is what if they tax unrealized capital gains? Well, yeah, but that would really simply be the end of life as we know it, you know. Um, so I don't really see anything that drastic happening. But meanwhile, it takes all the oxygen out of the room, and everybody focuses on that. No, the focus is short-term capital gains going up and
Yeah.
changing the risk-reward ratio.
It's
That's the
it,
whole piece of it.
it's the lesser of two evils. Well, we're not going to tax unrealized capital gains. We're just going to raise the regular capital gains tax. Oh yeah,
Right,
okay, that's
and the
great.
corporate tax rate too,
Yeah.
and anything else. You know,
Oh,
suck
thank
more
goodness.
disposable income out of this country, As Charlie Payne, I'm fond of saying, Charlie Payne says we spend $7.5 trillion to get $5 trillion worth of growth.
Right,
Now we just make that number 10 trillion for $7 trillion worth of growth,
right.
and the beat goes on, and we're moving in the same direction all over again. The other point that is probably worth making is a vote for Harris is not so much a vote for Harris, it's a vote for the syndicate, whoever the hell is running the country now. They've proven to us that they could appoint anybody in that position and nothing will change. I mean, they say that Trump is a threat to democracy, and we can argue whether or not he is and argue about January and all that stuff. It is what it is. Maybe he is, maybe it isn't. I don't know. I don't happen to think he is, certainly when he was president. But the real threat to democracy is a group of people deciding after the process that we've honored for years and years that we're just going to depose somebody and appoint somebody new. And the syndicate decided that for whatever reason, for good reasons probably, they're going to dispose of Biden and move somebody else in. And they argued for a while as to who that was going to be. And then they chose Kamala, and it could have been anybody else. And I think that's the real interesting part of this whole affair.
I saw a tweet the other day, and I don't remember exactly what it was, but the essence of it was we've had 2 assassination attempts on a major party candidate. This is like Banana Republic, where,
Oh, yeah.
you're looking, this could have happened in any third world country where there's 2 assassination attempts on a major party candidate. That's not good for the capital markets.
No.
The title of this channel is Markets and Madness. Well, there's a lot of madness in the world, and it's certainly affecting the markets. That's for sure.
Woody Allen did a movie called Bananas, and I'm fond of saying we live in a giant Jerry Springer show.
Yeah.
But these last couple of weeks, I really feel like we're in a Woody Allen movie.
Yeah.
Say hello to the people, and all of a sudden, you got a change in government. And
Yeah.
I think that the bigger point is that we have existed and thrived following a set of rules and processes. And we have a process. We have a process for immigration, for example. We set a quota and we say, okay, we're going to let X percentage of our population in through our borders. And we're going to do it this way. And we have an orderly way to do that. And people would come in. And it's not working. There's a backlog of years and years for people to wait to come in. But you could change that number. You can go from X to 2X and say, all right, we're going to let twice as many people. And the process remains the same. But they've ignored the process. And now they've said, well, we're not going to follow that process anymore. And then we've got laws. We have immigration laws. And individual states and cities say, well, we're not going to follow them. We're a sanctuary city now. And we've created a whole new category of entities that can violate the existing processes. And another process goes out the window. And now we've got a Fed.
And when governors don't follow why should the people follow laws?
Well, yeah, that's the next step, right? And that's what we have.
Yeah.
And then we've got a process where you're not allowed to steal. Okay, we have laws against that. But now we're saying, well, you know what? In some places, $900 is a good number. We'll let you steal $900.
Yeah.
So the processes are going out the window. And that's what happens when central banks become so powerful and intervene in these markets. Now we're all waiting for the Fed. And
Right.
suppose the Fed decided, suppose we get a new Fed chairman, somebody gets elected, maybe it's Harris, she gets elected and appoints a new Fed chairman. And that Fed chairman decides, okay, easy money again. And we basically print so many dollars that we effectively devalue the dollar's value. Well, think about that. Think about what happens. Now we're flooding the market with new dollars, which gives the ECB the opportunity to flood the market with new euro, and gives the BOJ the opportunity to flood the market with BOJ, and all of a sudden you've got global inflation. Well, it sounds crazy, but these central banks are operating in tandem, and they watch what one another does and see what they can get away with.
I always thought when we had those G7 meetings back, geez, 20, 25 years ago, we'd come out of that G7 weekend, whether it was Glen Eagles, there were, all these different places that these ministers would meet. And my feeling always was that each of these G7 nations would take a turn devaluing their currency and allowing themselves to grow. And they would all agree, okay, it's your turn. All right, it's your turn. It's your turn. And they'd walk around the table. And, here we are 25 years later, and we're talking about who's going to go first. The race to the bottom, we talk about in terms of
Yeah,
currency.
it could be. I mean, it could be just a big queen for a day kind of
Yeah,
meeting where, it's your turn to effectively
wear the crown.
devalue.
Yeah,
Yeah.
exactly. Yeah,
And that's another process that we got rid of. I mean, for years, we tried to figure out a way. The gold standard was inflexible. So after World War II, we found a way to build some flexibility into a system, and we had a discipline. I mean, if you think about Bretton Woods was really smart. They said, we're going to regulate currency. Now, we were already regulating interest rates. We had Reg Q, which set floors and ceilings on interest rates in the banking system.
hmm
And we found a way around that, right? Once we started inflating and it didn't make any sense to keep those interest rates. You inflate at 12%, and the bank's only allowed to give you, 5% or 6% and make loans at 7%. All of a sudden, the level of inflation undermines that structure. Now, Bretton Woods was the same way. I mean, they had floors and ceilings for currencies against the dollar, but if the dollar dropped to a point that was irrational, and the central banks were forced to buy dollars at rates that didn't make any sense at all, well, they had gold. They could take those dollars and exchange them for gold at $35 an ounce. And in 72, Nixon closed that window. And the dollar's lost 92% against gold since that period. I mean, dollars
Is that
have.
true? Oh,
Yeah,
yeah, I guess, if you look.
yeah. So think about it. Gold was $35 an ounce. You know,
But that was an
it's.
artificial level too, right?
I'm sorry.
That was an artificial level, $35 an ounce.
It wasn't so artificial. It was a law. Roosevelt made it a law. U.S. citizens weren't allowed to own gold, and its value was $35 an ounce. And people hoarded it.
Right.
And when central banks started to engage in these massive dollar rescue operations, and they started taking the dollars to the Treasury and saying, okay, here's 35 of them, give me an ounce of gold. The Treasury, and specifically Nixon, recognized that Fort Knox would be a vacuum if this kept up. So he closed the gold window. And that was 1972. So look what's happened to prices in 50 years from 72.
Right.
Dollars lost 92%. I think of purchasing power. It certainly lost more than that against gold. So we've rendered that system, that process, not viable anymore. And the dollar became a fiat currency. And now we're at a point where any central bank will look at every other central bank and say, okay, I can issue currency at a growth rate of, say, 2%, as long as the Bundesbank is issuing at 2%, and there's no change in the exchange rate ratio between the dollar and the euro. So we used to benchmark our currency against other currencies, but now central banks are playing that game, that this queen for a day game that
Right.
you just raised.
Right.
That's the model we're in now. So paper currency, as they watch paper currency evaporate and fiat currencies evaporate, gold breaks out, and they have to scratch their head and say, well, the market's starting to get wise to this. We better do something else.
Well, I mean, I think that's one of Trump's key economic points is to quietly devalue the dollar to get us back into the production area.
Or inflate.
And
And pay
inflate.
back with inflated dollars, yeah.
Yeah, and tariffs throughout Europe just to make American manufacturing more in the game.
Well, tariffs are a little different because you can target tariffs and you can use them for political leverage.
Hmm.
And I think that was Trump's game with China. When you hear people talk about tariffs, the first thing they say is, "Whoa, it's going to raise prices." Well, it's going to raise import prices, yeah, and it has an impact on the trade account. But raising prices in general, to some degree, I suppose, but we're going to go to another low-cost producer.
Right.
India will pick up the slack, or Taiwan.
Korea. Yeah. Yeah.
Yeah. So we get the Fed today. I mean, that's it'll be interesting to see what this market does. And we've been talking about all of these gains that people have, and will they be faced with a new tax rate on these gains? I thought Israel's move was interesting with the beepers
Yeah,
overnight.
it's a James Bond movie, you know.
Yeah. And it was big, too. They had something like 3,000 people or 2,000 people.
Some crazy number. Yeah.
Hezbollah got very angry over that. Uh, you know, what are they going to do? Fire more missiles, I suppose.
Yeah.
And that's the point I wanted to raise to you. You did a lot of work in the Middle East, and the Arabs used to have a saying, "Don't let the camel get its nose under the tent." And I think the invasion of Ukraine was the camel's nose under the tent. We've started this thing now. Now the West is lining up and saying, "Okay, it's us," and we got this big proxy war. And this is the age of the proxy war. This proxy war is breaking out all over the world. They've always been there. Iran's used them for a long time in the Middle East.
And when we're involved, Congress doesn't have to vote on it.
Well, yeah.
Right.
We're not at war.
It's not the War
Technically,
Powers
we're
Act.
not at war.
Yeah. You know, a friend of mine, someone who watched our first podcast and enjoyed it, was talking to me yesterday, and he said he saw a video, an interview of Zelensky. I think it was CNN or maybe some European channels. And he said it looked like Zelensky was out of cocaine and his coke dealer had no more. Says, you know, it's like he ran out of coke and his coke dealer had no more. So there's no more arms coming. That's it. He thinks the spigots run dry.
But that would be what would happen if Trump were elected.
Yeah.
Yeah. Trump.
And, you know, on another note, they're voting today on that SAVE Act. I know you thought that Johnson wasn't going to bring it to the table, but that vote is coming today. So I think he's going to force the hand of the Democrats to either vote it down, not bring it to the table. That's going to be an interesting point.
Well, yeah. I mean, even if the vote passes, the House, which is a tough call.
Yeah.
I don't think it will, but let's say it does, for argument's sake. Schumer's just going to table it. It's not going to
Right.
come up.
But that's going to be that's going to be an interesting election day election ploy. Well, you say that we're shutting down the government. It's you guys that are shutting down.
And just who would be watching that? If you're watching Fox or listening to talk radio, you'll know all about it. But if you're watching CNN or MSNBC, you're not going to hear anything about it.
Well, if it becomes the government shutdown at the end of the month, I think you will.
Yeah,
If they
but
really press
that
it.
assumes that the Republicans are ready to stand fast. And I don't see it.
You don't think so, but we'll see. We'll see.
It's going to take a lot for them to actually vote to shut down this government. But hey, it's certainly overdue. I can remember trading when the government shut down. Markets were delighted.
Yeah.
You know, guys would look at each other and say, "Oh, we saved $20 billion today, or $500 billion, or some astronomical number." And then they say, "Well, okay, we've got necessary people. Necessary people dwarf the size of every other government in the country. How many people are unnecessary? You know."
That was the big COVID thing. Yeah, you're unnecessary. You don't have to come to work, and that was a big part of the government.
Yeah, and we're not going to pay you now, but we'll pay you in the end anyway.
Right.
Yeah. So we haven't done anything to the debt.
It's going to be a quiet day in the equity markets until about 2:30 until we really hear what the Fed has to say.
Yeah.
So
I mean, the solution to that is to buy vol. You know. I
yeah,
mean,
and I'm
the
sure
VIX
that's
is
priced
what,
in.
17
I'm
or
sure
something like that?
options
Buy puts, buy
volatility.
calls. Let's sit and wait for it
by
to hit the fan.
strangles, by straddles. Yep.
Let me ask you, and maybe this might be a topic for another day. But suppose you had to set up a portfolio with a Harris victory versus a portfolio with a Trump victory.
Mm,
Because I think that's the way investors are going to have to start to think fairly soon. Maybe we're a couple of weeks away from that.
right.
But, you know, if Harris were to win, do you own oil? Do you own crude? I don't know.
Well,
But
it's
if
not
Trump
going
wins,
away. I think if it's not going away, so she might make it more difficult to get, which would push the price higher.
well, if Trump wins, drill baby drill is going to force the price of crude oil down.
Right.
So I wouldn't be buying oil as much as I would buy the drillers like Schlumberger and people like that. The pipelines, all of those kinds of the ancillary infrastructure to crude
And
rather than crude itself.
and I just want to say we're not giving an investment advice. We're just speaking out of turn. Yeah, just
Thank you very much. Yes.
we're not
Yeah.
giving investment advice. Um,
Past performance has no,
yeah,
all of those watchwords.
right.
Uh,
But yeah, I mean, I think if Trump gets in, drill baby drill, the price of oil goes down, and the suppliers and the manufacturers are going to benefit.
yeah, it's an
It is,
argument against crude, even though my gut tells me it's a nice time to buy crude because we're
but
devaluing the dollar.
if you get, the other side of the coin is if we do get that pickup in GDP growth, global growth, that's the engine for oil as well. So it's a two-sided coin. But I
Mm.
think your point about buying some of the derivatives of the oil industry, whether it's the pipelines or the drillers, make a lot of sense. In a Harris victory, I think she's going to make oil more difficult to get, but it's not going away. So I would think oil, I would be short the derivatives and long oil, short the pipelines and the drillers and long oil itself.
Mm.
One aspect, but I'm sure there's many more.
And gold would be a buy under Harris, but a flat to a sale under Trump.
I don't know. I think they both inflate. I think you buy TLT puts, you know, 10-year
Well, it's the
treasury.
level of inflation, it's the rate of inflation that we talk about. I
Yeah.
mean, yeah, I guess the other to make sense of this conversation, you have to pick a side for the House and the Senate because that really means everything. We could
Yep.
be in a gridlock again too. The
Yeah.
House is certainly up for grabs. The Senate looks like it's leaning Republican, um, and the Senate's been the key,
Hmm.
even though the legislation
Well,
originates.
I think the House is very important too as to what they bring and what they investigate. We saw something last night saying if there's um, a Trump victory or a Republican House victory, then a lot of these lawfare cases go away that Trump is facing.
Yeah, yeah, I
You know,
guess so.
Yeah.
And the
it's what those committees bring to the table, whether it's a Democratic committee or a Republican committee, what they
yeah,
bring
who
and
chairs
they
the
push.
committees?
Yeah, yeah,
Yeah, I think the House and the Senate are wild cards here, even though the Senate looks like it's going to change,
hmm
roll over, just in terms of who's fighting for their seat. But the House is really a close call, and the election's a close call too,
yeah.
by vol.
All right. Well, listen, it's been a good chat this morning. I think we covered a lot of interesting things.
All right.
Um, our next call will have some answers to these questions, but certainly not all.
Okay. Talk to you
Have a
later.
great day, Tim. Thanks.
Bye.
Bye.